Hello and welcome to the Madden Report, Massachusetts' most informative, trustworthy, and yes, most exciting real estate show. We bring it to you whenever, however, and wherever to give you the information that you need. I am your host, Mark Madden of the Madden team at Century 21 Commonwealth, and today I want to talk to you about the extended homebuyer tax credit. We get a lot of questions about all the stipulations and all of that, so I wanted to get it out on video so that you can see it, you can have a better idea of what you're in for and what benefits you can receive if you buy a home over the course of this upcoming winter. I brought myself some bullet points so that I don't miss anything, so that we can be right on track together today. The extended tax credit for first-time home buyers has been extended through the end of April 30th, 2010. What that means is that if a first-time home buyer, somebody that has not owned a home in the previous 3 years before purchase, would receive $8,000 as a tax credit depending on the price of the home and the buyer's income. On top of that, there's an expanded tax credit for current homeowners, whereas if a person has lived in a home 5 years out of the last 8 years that they own, if they buy another principal residence under $800,000, and depending on their income, they would also be available to receive a $6,500, so $6,500 tax credit. What this means is that there's a lot of opportunity for a lot of buyers out there right now, and with the low interest rates, it's time to jump on things if you're thinking of moving. How to determine your credit amount. As I was saying, it's done by price and it's done by the buyer's income. Price. Any home purchased in this program has to be of $800,000 or less. An income. For a single person, the income limit is $125,000, and for a married couple, the income limit is $225,000. Now, the question we receive is, what if my income is slightly greater than 125, or my income as a married couple is slightly greater than 225? Well, there are a decreased amount of tax credit available up to a maximum amount of 145 for the single person and up to 245 for your married couples. Offers, this is kind of the big point. This is where people are getting a little bit confused. Offers must be in writing and agreed to by April 30th of 2010. That doesn't mean that you have to close by that date. All that means is that the accepted offer has to be in writing by April 30th of 2010. You have to close, have keys in your hand, be ready to move in by June 30th of 2010. So you have 2 months from the deadline for having it under agreement to when you close. That's a great gap that you have now. On the previous version of the first-time homebuyer tax credit, you had to close by the end of November. So there was no real under agreement point, but this one's giving people a goal to have the under agreement, and then they can get to closing a little bit more smoothly rather than trying to just cram it all in as everybody did at the end of November. This tax credit does not need to be repaid. So this is something that the government has given you free of charge as long as you're a first-time home buyer, haven't had a home in the last 3 years, or you're a current homeowner who has lived in this residence for 5 out of the last 8 years, and you're thinking of buying a new principal residence. You can't buy a vacation home. The IRS will find it out. So it has to be a principal residence if you're a current homeowner right now. If you have any questions, I'd recommend visiting themaddenteam.com. Go on our blog. If you're seeing this on YouTube or any of the other sites that we put this video up on, underneath this video on our website, we're going to have certain links that are going to take you to some FAQs, some PDFs that are going to be helpful for you to better understand this. Also, if you have any questions, don't hesitate to email me, Mark at themaddenteam.com, and I look forward to talking to you all soon.